Happy Friday, everybody. We've got ourselves another portfolio review, and this has been a pretty interesting week. Welcome back. Please subscribe and strap yourselves in. This was a very exciting week. So we've got news about the coronavirus. I will just let Mr. Azar here describe it.
Today, President Trump took decisive action to minimize the risk of the spread of novel coronavirus in the United States. Since taking office, President Trump has been clear. His top priority is the safety of the American people. In addition to the steps that the doctors have outlined, we continue to operationalize a multi-layered, cross-agency public health response. Following the World Health Organization's decision to declare the 2019 novel coronavirus a public health emergency of international concern, I have today declared that the coronavirus presents a public health emergency in the United States.
And there you go. I'm not going to watch the entire thing, but you guys get the gist of it. We have a public emergency officially in the United States, and the markets have actually responded accordingly. If we pop in here to the chart looking at SPY, we can see it's down 595. Yeah, it's a 1.82% move down. We've got the whole chart right here. Let's zoom in a little bit. Does it not let me zoom in? Come on. All right. Yeah, so here we've got the last 6 months basically. Pretty much almost nothing but up. We had a little correction here, but almost straight up. And then boom. Oh, okay, we've got a little correction here as well. So beginning of December and beginning of October. End of September, beginning of October. So we got correction. And here we have another correction. So it's moving downward pretty quickly. And this makes for exciting trading in the markets, guys. Volatility is up. So as you can see, the IV rank on SPY is 49.5. Now that is awesome, except I already have positions in SPY which want the volatility to go down. So that's not necessarily helping those positions. But my short positions are actually doing pretty well. So well, in fact, that I actually lost all of my short delta today. And so I need to re-establish my short delta coming on Monday. That'll be my priority. I'm hoping the market won't continue moving aggressively down and give me a chance to do that. It can be hard to keep your short deltas in a short market. That's all I gotta say. Unless you've got static delta, which is literally just shorting the stock. But I don't have a large enough account to do that yet. So anyway, so with this public emergency and this resurgence in volatility in the markets, this week's been pretty fascinating. Monday we had a nice down move, continuing off of Friday. And then at the end of the day, it started to rally back up. So you've got Friday moved down. And I was short deltas into that. Made good money Friday. And then Monday, it continued down and then rose back up. And we've got this little bounce on Tuesday. I reset my deltas. So I had, I think I had like negative 20 delta to 40 theta or something crazy like that. And because I'd reset all my deltas, this bounce caught me off guard and I actually lost over $200 on this up move going through Wednesday. Thursday was weird because it went down and then it rallied back. I made a ton of money on Thursday in Tesla though, because I've been following Tesla very closely and I put on a bunch of earnings trades. I made over $100. I think it was like $120 in Tesla, maybe $140 in a single day, and that actually really helped my P&L this week. As you can see, my P&L for the day today is up 140. I'm at 894. If we want to look at, let's look at account balances and compare to last week. So last week I was at 673.90 in P&L for the year. My net lick was 6,411. Net lick is important because this is where they deduct your commissions from. So the P&L doesn't actually include commissions. The net lick does include commissions. So then if we come over and let's take a gander at my, for this week, end of the week performance, I'm now at $8.94, so I actually had a P&L for the week of over $200, which is fantastic. I love the volatility in the markets. It's going to be very interesting trading back and forth. Actually, this is actually a positive P&L, but I will explain why it's showing a negative P&L in a second. Anyway, but for my IRA account, yeah, $8.94, almost $900 on the 31st of January. So almost 900 P&L after 1 month. This year's gonna be crazy. If I keep trading like this year's gonna be crazy. So my net leg is now at 65.30. So net leg increased by $100, P&L of over $200, and if you do the quick rough and dirty math right there, it's about $100 in commissions. Now that is actually pretty high, and that just illustrates the reason why you want to have more money, like a larger trading account. The reason my commissions are so high compared to my profits is because of the tiny size of the account. If we go in, so I am trading in the IRA, and the IRA, they require you to have a covered trade. So a covered trade, all that is a trade like this. I sell one, and then I have to buy another to cap my risk. These are put options. So I sell one put, buy another put. This caps my risk in the trade. Basically, it's very hard to trade with a small account in an IRA and be efficient with options, especially when the market is up and down, up and down, up and down. Because I'm constantly having to adjust my deltas, and that generates more and more trading commissions. And these are low trading commissions. Like, I'm not complaining about the commissions. Don't get me wrong. I only pay $1 for every option that I open, and it's free to close them on Tastyworks. So I'm not paying a ton in commissions. It's just when you place so many trades, that really eats into your profits. This week I probably put on about almost 50 trades this week. And with my style of trading, let's look at my activity. Yeah, so you can see like this trade, there's actually 4 options. That's $4 in commissions right there. Here's another $4. Here's another $4. Another $4. These are all butterflies. Butterflies are going to be $4. More typical of... Oh, wait. This is Tesla. Let's get rid of that. All right. So more typical is my calendar spread. So right here, we've got a 160 credit, and this is 2, so I'm only paying $2 in commissions on this. However... So I put this on. This is the 212. Wow, I put this on a while ago. Expand that to 14 days. Whoa. 212 put. So I put this on for 135. It closed for 160. Made 25 cents on that. So 25 cents on 135. What is that? That's 18%. So I made 18% on that. But I paid $2 in commission to make 25 cents. That's almost 10% of my profits in commissions right there. That's pretty high. This is like just shy of 10%. That's probably like 9%, something like that. Anyways, that's pretty high rate of commissions. And the reason I have to do it that way is just because with calendars, you're not collecting very much. You're paying premium up front to open the position. So I paid $1.35 per share, so that's $135 to open that position, and my $135 made $25 in... When did I open this? I opened this on 1/27. So that was on Monday, actually. And that closed today, so basically made 18% in 1 week, which is fantastic. That's exactly what you want. But it's still fairly high commissions relative. Now, in contrast, let's find, here we go. So let's contrast that with this calendar. I paid, there's 4 legs. I got 157 credit. So $1.57 credited to my account. That's $157, and I only paid $4 to open the trade, and it's free to close. Now, I'm only planning on keeping 50% of that, so that's just shy of $80. It's like $79 or something. Anyway, so I'm only planning on keeping 50% of this in profit. But 4 out of $79, that's like 5% of the trade. So already the commissions are eating half as much as they are with calendars. So it's just the nature of having a small account that's creating these high commissions that we're seeing. And plus, with the market volatility, I definitely have to be careful not to overtrade, because overtrading and over adjusting will definitely kill your account. Like, it's definitely possible to do that. So you don't want to overtrade, but you do want to trade a lot. And there's a difference, and it took me a long time to learn the difference. So yeah, so that's just an explanation of the breakdown of how the commissions work on Tastyworks. Now, as I get larger and as I'm able to put more money, I'm actually putting $100. There we go. I'm actually going to be depositing $100 into this, my margin account, on Monday or Tuesday, maybe. Oh, Monday or Tuesday. Anyways, so I'm putting $100 in here. You'll see that next week, hopefully, if I don't lose $100. Let's actually look at why this is reflecting as negative, even though this is actually, I've got positive P&L here. And what it comes down to is market closed and we've got wide bid-ask spreads. So you can see right here the bid-ask spread between SPY. Bid is where you can sell it, ask is where you can buy it. So right now it's a penny wide. I can literally buy this for $3.22 and turn around and sell it for $321.99, and I'd literally lose a penny in over that split second transaction if I were able to do it in the split second. Now, this is the most efficient market in the world, and you know you are getting a fair price like the instant you buy or sell. Like, they're giving you the best possible price. There's only a penny difference. And that penny is actually how the market makers make their money. So they're making their money because they are buying from you at the bid and selling at the ask. And that's their job. Their job is to buy or sell to everybody who wants to buy and sell. That's literally what their job is. So that's perfectly fine. Let's widen out a little bit. Anyways, this is actually pretty impressive because the market's been closed for a while. So there's a lot of trading going on right now. Anyways, yeah, so let's come in. Let's look at why I'm losing $195 on Sprint. Right here, we've got the 159. Most of it's coming out of this put option. And we're only 13 cents away. So I should not be losing $190 on a 13-cent move. That is pretty ridiculous. Now, if we come into the trading platform and we look at the bid-ask spreads on Sprint, there's a $100 difference right here. So this, I sold this spread for 172. Let's come back in here. Yeah, so I sold each of these for 85 and 87. So that's 172. That's what it totals up to be. This is just a regular strangle. And then we come in here and we've got 70 to 170. That's $100 difference between the bid and the ask, which is pretty crazy. And the way the platform calculates the math, they look at the ask. For me, if I were to buy this back right now, I would have to pay $170 to get out of this position. Yeah, that's pretty crazy. And then this is even crazier on the put side. So it's 44 cents. So you can sell this option for 44 cents right now. Oh, the market's closed technically, so I couldn't, but theoretically. And then we've got 450. 450, that's 10 times this, and that's pretty insane. Yeah, that's why the markets are just closed, the spreads widened, there's nobody's trading these options right now, and the market makers are trying to cover their risk, and so they kind of have to widen those spreads out, and that way they can make some money in the middle. This is why you do not want to trade illiquid products, although it's kind of weird that this happened in Sprint, because Sprint is actually pretty liquid. It's got 4 stars for liquidity over here. That's what this lick thing is. And if we look at let's look at the volume. Oh, yeah. volume was very low. Not very many trades today. There's actually more volume outside of this. So right now, most of the volume is probably in the front month because that's March. Yeah, most of the people are trading here. There's more positions here. There's a lot of trades going on the 5 point. So there's a lot of traders buying and selling these positions right here, which is interesting. They're much more liquid too, so the prices are better priced now rather than right here where we've got 27. This is like crazy. And we got a lot of liquidity on this side too. So, anyways, yeah. So as time goes on, more and more people are going to start buying and selling options here. Let's actually look at the open interest. Whoa, yeah. There you go. That makes a lot more sense. So we've got a lot of people buying cheap out of the money options here. It's 4.39 thousand. Then a lot of people within the money puts. Ooh, that's interesting for the guys that sold that. That really sucks. Hopefully they know how to manage that. The people that bought these though are definitely quite happy. So they probably bought them for. Well, we can't even tell because the markets are closed right now, and this is all out of whack. Just to buy the one put, you'd be purchasing it for $475, and you can sell it for $0. That's crazy. That's just crazy. Anyways, yeah, fun stuff. Fun stuff. So this week has been very exciting. Today, I also had another earnings trade, which helped me significantly. And that was a broken wing butterfly in Amazon. I did the 1755, 1765, 1770. So that is, if we go into Amazon, 21 days. Wow. That's a long ways away. So yeah, I bought this 1755, 1765, 1770. Wow. So that's actually worth 30-cent credit now. That's cool. So if we go in here, I sold this for $1 before earnings, and this was right at the expected move for Amazon. And the IV is actually still pretty high. I could probably sell another if I wanted to. Now, in a single day, Amazon earnings were insane. It shot up $138. When I was looking at it this morning, it was up $200, basically, like maybe even $220. So I was able to close that trade for 10 cents, and I pocketed 90% of the credit, which is insane. Like, that was pretty awesome. Now, I did take a good amount of risk on this. I risked about, I risked about $370. So if Amazon had done the exact opposite and completely plummeted, like, I would have been out $370 just like that. Just boom. But thankfully, Amazon's a pretty solid company, and I had faith that even if they had a terrible earnings call, it wouldn't be so bad that the market would just annihilate them. And thankfully I was right. So yeah. Probably not going to take that much risk on many other earnings trades because I'm not as familiar with Google and the other ones. But we'll see. I mean, it's always fun to put on. And I had a good probability of that trade working. Well, just to like examine, I probably had... let's see. Yeah, so this is approximately the trade I had on, and max profit, max loss, 595, buying power, 400, delta. Yeah, so I had a 75% probability of making money on that trade. Statistically, everything was to my favor, basically. So that's why I like butterflies. Butterflies are fun trades. Maybe I'll break them down sometime and show you guys how they work. But that is all for now. This was a fantastic week. Like I said, up $200, up $100 in net lick. Continuing to chug away. For January, that's a $500 increase in my portfolio value just from trading. 8% move this month in the positive direction. This is a good month. Here's hoping the rest of the year's like that. Man, if I keep trading like this all year, I could double my money. I mean, that would be pretty amazing. I don't expect the rest of the year to go this well. So, it's a really good start to the year, though. So, very, very happy with it. Thank you guys for joining me for this week's portfolio analysis, and have a wonderful weekend, guys. Please subscribe, and we'll see you next week.